Hi, I'm Catherine McQueen, and this is Smart Money, the show where we lift the lid on the hedge fund world to show you what the masters of the universe are buying and selling. Today's trade involves a man who until fairly recently held one of the most important roles in global business as CEO of the Kraft Heinz company, an American food company with a market cap of $32 billion. Bernardo Hees, a Brazilian economist and businessman, held the CEO position until June 2019. He has previously been the CEO of the Burger King Corporation and America Latina Logística, Latin America's largest railroad and logistics company. He is also a partner in 3G, the global investment firm. In early February this year, Hees made a significant investment in Avis Budget Group, the car rental company. His purchase of 430,169 shares at an average price of $34.87 gives his holding a market valuation of just shy of $15 million. Let's see if we can deduce why he made this trade. Avis is a company we all know. It was formed in 1946 in New Jersey and operates a vehicle rental system with approximately 5,500 locations that supply rental cars to the premium commercial and leisure segments of the travel industry. With a market cap of $3 billion, they have a multitude of brands globally and in addition offer optional insurance products and coverages and a business intelligence solution. Looking at the fundamentals, Avis has a return on equity of 34.95%, the best performance in an industry which averages 12.98%. Return on assets and profit margin came in at 0.75% and 1.91% respectively, in line with the rest of the industry. The firm's price-to-earnings ratio is 11.8, which indicates a very decent valuation that is slightly cheaper than its industry peers. Its forward price-to-earnings ratio of 11.01 is also reasonable. Avis's enterprise multiple indicates that the firm is valued rather cheaply. Earnings per share is accelerating, and the growth rate is expected to increase by 1.36% on average in the next 2 years. Earnings per share has been growing by 3.41% on average over the past 5 years. Over the last year, Avis showed a 0.36% decrease in revenue, but over the past 5 years, revenue has grown on average by 1.32% each year. Avis has a Piotroski-F Score of 4, which indicates average health and profitability, yet both the current and quick ratios are underwhelming when compared to industry averages and indicate a less than optimal balance sheet setup. The firm's debt-to-equity ratio is 3.2, suggesting that the firm is more dependent on financing than its peers. Looking at the charts, both the short-term and long-term trends are positive, a very positive sign. When comparing the yearly performance of all stocks, Avis is one of the better performing stocks in the market, outperforming 93% of all stocks and 83% of all stocks in the automotive rental and leasing without drivers industry. The stock is currently making a new 52-week high, another strong signal that is matching the S&P 500's performance. Volume is considerably higher in the last couple of days, which is a good sign during a strong movement up. We've also seen a golden cross, a positive development, where the 50-day moving average crossed above the 200-day moving average to the upside. Hees' trade was registered on the 7th of February at $34.87, which means that he got in almost immediately before the recent ramp up in price. As it stands, his investment is up 15% and worth $17.77 million, a tidy gain for a few days' work. Recent news of Hees' appointment to the Avis board as independent chair of the board and its executive committee makes things particularly interesting. That announcement was made on Monday, February the 10th, and appears to be the driver behind the recent price ramp higher. It seems like Hees' star appeal has made a big impact on this stock's short-term performance, and he entered the market just before the news was announced. There are whispers that the firm is expected to miss expectations on its upcoming earnings, which isn't exactly the news that encourages a big upside ramp. With all this in mind, we suggest conducting thorough due diligence before making any investment decisions. But this is a stock that we'll be keeping a close eye on. That's all for now. See you next week.